Gold versus Bitcoin. Which one will survive the next crash? In June 2025, financial markets are again filled with uncertainty. Interest rates remain high. Inflation continues to fluctuate. And geopolitical tensions are keeping investors on edge. In this environment, many are asking the same question. If another financial crash is coming, where should I put my money? Gold or Bitcoin? The safe haven reputation. Gold has been trusted for thousands of years. It's physical, scarce, and recognized worldwide. When markets panic, people rush to gold. It doesn't rely on electricity, code, or internet access. And during past crashes, gold often gained while stocks and currencies fell. Bitcoin is much newer, just over 15 years old. Yet it's earned a name as digital gold. It's decentralized, limited in supply, and can be moved across borders instantly. Some argue Bitcoin is even safer because governments can't control it, but others say its digital nature makes it fragile during real-world disruptions. Performance during past crises. Let's look at what happened in past crashes. During the 2008 crisis, gold went up sharply as banks collapsed. In the 2020 COVID crash, gold also surged, while Bitcoin fell at first, but then rebounded strongly. Then came the 2022 crypto winter. Bitcoin dropped over 70% from its peak, while gold stayed stable. That showed that Bitcoin was still seen more like a tech stock than a safe haven. But in 2023 and 2024, Bitcoin recovered and gained institutional trust. Major banks, hedge funds, and even governments started holding Bitcoin as part of their reserve strategy. By mid-2025, Bitcoin is no longer just a fringe asset. It's mainstream. Liquidity and accessibility. Gold is easy to buy in most countries. You can hold it physically, or invest through ETFs. But it's harder to move quickly. Selling large amounts can be slow, especially in a crisis. Bitcoin is faster to buy, sell, and transfer. With a phone and internet, you can move millions in seconds, even across borders. However, during government crackdowns or internet shutdowns, access can be blocked. Volatility and risk. Gold is slow and steady. Its value doesn't swing wildly. This is good during panics, but it also means lower returns over time. Bitcoin is highly volatile. It can rise 20% in a week, or fall 30% overnight. This scares conservative investors, but attracts risk-takers and traders looking for big gains. If a crash happens tomorrow, gold might hold or rise slowly. Bitcoin might crash, or it might soar, depending on the reason for the crash. Inflation hedge. Both assets are seen as protection against inflation. Gold has a long history here. When currencies lose value, gold often rises. Bitcoin's role as an inflation hedge is still debated. Some say its limited supply makes it ideal. Others point to its high correlation with tech stocks, which weakens its hedge status. Government reaction. In a crash, governments print money, lower rates, and try to stimulate growth. This usually helps Bitcoin, because people fear currency debasement. But governments can also try to regulate or ban crypto, especially in emergencies. Gold is safer in that sense. It's accepted and legal everywhere. What the future holds. As of June 2025, both gold and Bitcoin are important parts of modern portfolios. Gold remains the classic protector. Bitcoin is the digital disruptor. The next crash will be a test for both. If it's caused by war, gold may shine. If it's driven by currency collapse or banking failure, Bitcoin could dominate. Many experts now recommend holding both, not one or the other. Use gold for stability, Bitcoin for growth and innovation. Final thoughts. No one knows the exact shape of the next crash. But preparing today means diversifying wisely. Gold brings historical trust. Bitcoin brings futuristic freedom. Instead of asking which one will survive, maybe the better question is, how much of each should you hold? This is not financial advice. Just a reminder to stay informed. And never bet everything on one asset. The smart move is balance. Especially when the storm is coming.